Hi, this is Timothy Schutte with Exit Realty and Associates. Welcome back to my video blog. In the news, there's been some talk about 50-year mortgages and how the Trump administration is trying to push that and take a look at it. It's creating a conversation for sure. The question really is does it make sense? Is it a good thing? I think mortgage is derived from the Latin word, which basically means payments for life. And to me, right off the bat, I feel like 50-year mortgage feels like payments for life. But with that said, a 30-year mortgage is quite a long time as well. And that's even what Dave Ramsey would say is too long. So when you're looking at a 50-year mortgage, the way the amortization schedules are worked up, the way that some items and how interest rate is paid, you pay a lot of the interest up front. So in the scenario where you're paying for 50 years, let's say, your interest payments total are way higher than on a 30-year because you are paying more. It does address more of a symptom than the cause, I would say. What is the symptom? The symptom is that affordability is a problem. And affordability with demand and supply, when you're building that supply, it costs more than what most people want to spend or can't afford to spend. So that's really, I feel like, where the supply issue is. And because of that, lack of supply, higher demand, 50 years makes sense from the standpoint of, can we lower payments? But do the payments really get that much lower? Calculation that I looked at earlier this week was on a $400,000 house, your payments really only went down by $300 a month, which is like for 30 or 20 more years of payments, can you justify it? With that said, everything's different. So I've seen some commercial mortgages or large scale stuff. It might make more sense because you're buying a business rather than a house. But that's really a wealth generator. And with single family houses for your personal residence, how does your wealth build on a 50-year compared to a 30 or 15-year? You're not paying as much principal down as fast. You might get appreciation. You're not paying your principal down as fast on a 50 compared to a 30 or a 15-year. You do get to own it. So your appreciation is where you're going to build most of your wealth instead of appreciation plus principal pay down. Just a few other thoughts on it is, in 2003, 4, 5, right before the financial crisis, they relaxed some rules around mortgages and it created a ton of demand. A 50-year mortgage could create more demand, which could push pricing up higher, which in turn might make the point mute on whether or not that helps affordability. It also could lead to different and riskier lending practices. I did see an article where they're thinking that investors wouldn't be that interested in it because the length of 50 years. And so there's just a few things that, we're creating conversations around it. Will it happen? It could, it might. I think there's some European countries that have 50-year mortgages. But the funniest meme that I saw about it was a guy signing a mortgage and his grandson at 7 years old was co-signing for him for time. You got to think about through some of those things. For me, it's neither here nor there. It's business. But before you go to refinance or jump on the bandwagon, I would recommend having a phone call. Would love to chat with you through some more minute details of what that would look like. If you have any questions, feel free to reach out. This is Timothy Schutte with Exit Realty and Associates.